YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So a lot of you guys sent me a lot of Instagram messages and Twitter messages to do a review on this monthly dividend stock. And a lot of you guys made a comment in the comment section as well. So I'll do a dividend stock analysis, a review on the stock, and we'll see if it's a yield trap. So again, smash that like button. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. I'll tell you what I really think about this dividend stock. So let's check this out right now. That dividend stock has a symbol OXLC, Oxford Lane Capital Corporation, has a dividend yield of 12.16%, a PE ratio of 2.34, volume 1.60 million US dollars. The market cap was 972.36 million. Year range was 616 to 853. Day range is 718 to 745, and the previous close was 745. So there is a significant dip, and these guys are trying to make a rebound. But we really need to know what's in these guys and what these guys are about before you start jumping to conclusions and say, whoa, the yield trap, this is good. There's a dip. Should I buy it? I'll reveal this to you. Kind of go in rapid fire a little bit. So they're a publicly traded, closed-ended management investment company that has registered an investment company under the Investment Company Act 1940 as amended. Our investment objective is to maximize our portfolio's total return. Our current focus is to seek and attract risk-adjusted total return by investing primarily in debt and equity tranches of CLO vehicles. They are collateralized principally by a diverse portfolio of senior loans in which generally have little exposure to real estate loans, mortgage loans, pools, or consumer-based debt, such as credit card, receivables, or auto loans. CLO investments also include warehouse facilities, which are financing structures intended to aggregate loans that may be used to form the basis of the CLO vehicle. I'll try to read that 10 times. So we need to look at a few things. Look at their overview. They explain their rationales why U.S. leverage loans. They said leverage loans are generally secured loans made to corporate borrowers, often in connection with buyouts, acquisitions, or recapitalizations of existing corporate entities. Firstly, in senior secured leverage loans are generally the primary collateral held in CLOs. Leverage loans benefit from the following characteristics. I can't talk. Senior and secured. So here's what they look at this. Senior secured loans, percent of capitalization 30 to 50%. So let's look a little bit more into these guys with their revenue. Here's some stuff to look at with their income statement. So this is revenue, 74.82, 89.4, 122.15, 127.35. So we're going to look a little bit more. The gross profit. So 2018, 42.63, 51.35, 75.74, and 79.63. Quarterly revenue. Okay. 2020, 66.33, 59.81, 67.53, and 86.91. So there are some pretty decent trends with the revenue, but we have to look at their dividend history. The one thing I always look at with these monthly dividend stocks is how are they in the past? How are their trends? So 2011, 50 cents, 55 cents, 70 cents, 60 cents, 40 cents, and then all of a sudden, monthly dividend 13.5. So 2018, decrease in dividends. So right here, this is somewhat of red flag to me. And then monthly 13.5. Now you can understand with the pandemic, they took a huge hit. They're slowly recovering. So one thing to look at these guys, the high dividend yield is the dip is there. So going back to the price per share, it has dropped significantly. There is an increase in revenue. A lot of these monthly dividend stocks that first were quarterly dividend stocks, sometimes things can be red flags. So it's a cheap dividend stock to buy. It's a monthly dividend stock. Again, I'm not giving financial advice for entertainment purposes. Only disclaimer in the description. 2020 at 13. You hit a huge dip right here in 2020. And slowly the dividend is increasing. So it's $7.40. There is a dip there. I'm not expecting dividend hikes, significant dividend hikes with these guys. And again, referring back to where they were, went a little too fast. 25.50, they hit 60, then they dropped to 40s. Something's not right there. I don't like dividend decrease. Now, again, I have shown you some videos on stocks that decreased and I am buying, or some that are hot to buy. You have to ask yourself, these dividend trends, are they attractive? Now, for the price, looks good. Dividend growth, I'm not a fan of. So I know it's a high yield dividend stock. Sometimes even looking at PE ratios when they're really low, again, FFO is very important, but when you look at things really low, that can be a red flag. Now the revenue is good, dividend hikes starting to get there, but it's just not my cup of tea. Now, if you like monthly dividends, go for it. I mean, agnc stock is another one. Prospect, there was a dip there. Okay, I'm just not a fan of those guys because I don't like the dividend decrease over time. So let me know what you think of this video. If you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss videos. I did a speed run on these guys, and I'm going to be at work tomorrow. I'm going to post a video Saturday and Sunday, but right now I have another midterm coming up. I'll probably, you know what? I'm not going to do one on Sunday. I'll do it on Monday. Go from there, but they'll probably be behind with schoolwork. You guys take care and have a